In this video, let's explore what is balance sheet. A balance sheet starts by outlining what a business owns. These resources, called assets, include everything from physical property like machinery, to intangible assets like intellectual property, and even financial assets like cash. Understanding assets is the first step to grasping how a company functions financially. Every asset a business holds must be financed either by the owner's own investment, known as equity, or through borrowing from others, which is referred to as liabilities. This distinction is key because it reveals who ultimately has a claim on the business's resources. Equity represents the ownership stake in the company, while liabilities are the debts owed to others. Both are crucial elements of the balance sheet as they explain how the business funds its operations. The balance sheet is grounded by the accounting equation: assets equal equity plus liabilities. This means that everything a business owns must be financed either by the owners or by creditors. This equation ensures the balance sheet stays balanced. This is why it is called balance sheet. A balance sheet offers a clear picture of a business's financial structure at a specific point in time. It shows not only what the business owns, but also how it was able to finance those assets, providing valuable insight into its financial health. The three key elements of a balance sheet are the following. Assets. These are the resources the company relies on to generate future income. Liabilities. These are obligations the company owes to external parties. And equity. This is what's left over for the owners once debts are paid. Together, these give a comprehensive view of the company's financial standing. Assets are divided into current and non-current categories. Current assets, like cash or accounts receivable, are those that can be converted to cash within a year. Non-current assets, like buildings and machinery, are long-term investments that the company uses to run its business over time.
Similarly, like assets, liabilities are also split into current and long-term obligations. Current liabilities are debts that need to be paid within a year, such as bills or short-term loans, while long-term liabilities include bonds or loans that will take longer to repay. Equity represents the owner's stake in the company. It's made up of share capital, the initial investment by shareholders, and retained earnings, which are profits the company has chosen to reinvest rather than distribute as dividends.
Here's a simplified example of a balance sheet. On the left, we see the company's assets split into current and non-current categories. On the right, we see liabilities, which include both short-term and long-term debts, as well as equity, which consists of share capital and retained earnings. The total value of assets always equals the total value of liabilities in equity.
There are several types of balance sheets, each serving a different purpose. A classified balance sheet organizes assets and liabilities into current and non-current sections. A common-size balance sheet expresses all items as percentages. Vertical and horizontal formats allow for better comparison across time period.
A well-prepared balance sheet ensures clarity and transparency, which is essential for both regulatory compliance and internal decision-making. It helps in managing financial risks, offers insights into the company's financial health, and serves as a solid foundation for future strategies.
Despite its value, a balance sheet is not without limitations. It's a static snapshot of the company's finances at one point in time, which is not always the best source of information. Therefore, it is essential to analyze much more other data about the business together with the balance sheet. Certain items, such as the value of assets, may involve subjective judgments.
Thank you for watching. Do not miss our new videos. Make sure you subscribe to our YouTube channel right now. Just click subscribe button below this video.
Let us know what kind of videos you like more. Practical problems or theory explanation. Please leave your comment below the video. Thank you for your comment.